Good day, everybody. My name is Felix Medes Jimo, and want to expose you to the best way of handling scalping of Boom 1000. A lot of my community members have asked me, how do I trade Boom 1000 and scalping it to make money? The best time frame to use is 5 minutes if you're scalping Boom 1000. I love Boom 1000. There are other booms. Boom 300 too is good, all right, but it's not pocket friendly. But there's something I need to pass to you. You must be ready to bear some level of drawdown. Maybe you are trading with to enjoy Boom 1000 trading. Don't trade with small, at least minimum of $100. You may want to ask why, because you can encounter some drawdown, so you need to come out of it. You can only be lucky sometime to trade with $20, $30 to sustain it. And so, best bet, have $100. So let's go. I'm going to take you through. Very simple. So pay attention, and the tools I will use. I'm just showing you free. You cannot pay anything to me to get it. Okay. So now let's go. This is your chart for the Reef Synthetic. Okay. So if we go to the chart, so first of all, you want to take the instrument, Boom 1000. So Boom 1000 is my favorite boom and crash. And then so we need to look at it. 1000 had been down for long. So this is 24 hours. So you need to identify which trend are we now. You can say we're in downtrend before, now we're taking up, right? Because, excuse me, look at it here. Let's take this trend line. So we are invariably going upward, but there's a little challenge here. Right? So Boom 1000 has tested this place now. 1, 2, 3, 4. So this is the fourth time or fifth time is testing this range. Okay? That is to say there's an explosion coming on Boom 1000. So, but you want Boom 1000 to actually cross this point. So I'm not creating pattern for you, just to show you that you have to see it in larger part. The best way of trading Boom 1000 any boom is to trade it like normal trading, higher time frame, right? Minimum of 15 minutes or yeah, minimum 15 minutes, if not 1 hour, 30 minutes. 30 minutes, 1 hour is better for you. But so now let's go. The best strategy. 5 minutes to scalp the 1000. But I've seen this now. I need to know which trend are we. Okay. We've been going down for a very long time. Look at it. From 1000 went down since April and till July was going down. Right? High, low, high, low, high, low, high, low, high, low, high, then intricated here, then squeeze, and then eventually grab, return back again. It would drastically fall, low, high, low, a high. This high was still there. Then we carve the low until we took it out. If you look at it, yeah, so I'm doing more of detail analysis, so but it's not necessary for you. So that is to say, if this guy is going to crash and crash back to this point. So now let's go. You want to scalp Boom 1000 in a very simple way. So first of all, there are two you're going to add to help you. So, but I'm going to trade between 30 minutes to identify trading range and 5 minutes to pick your trade. Now, to trade it in a clean slate that you don't even need any indicator, that's the first formula. That's price actions, simple price action. All right, so let's go. So we're going to go to 30 minutes. Okay. So here we're in 30 minutes. To just identify this guy. So in 30 minutes, right, is an uptrend, right? But already kind of coming down. Okay. So you look at this is a low, this is a high, this is a low, this is a high, this is a low, this is a high, right? So this is a high, a low, a high, a low, a high, a low. And the high, low, a high, a low. No, a high, a low. A high, yes, higher than this, low. So this is the highest now. So sometime I want to take the highest. So I'll mark it out. Okay? So I'll take the highest to mark it out. Even though you have this upper limit there. Okay. You just to maintain law and order so that I will know when I'm paying much attention. Remember, this is the top that if you break this, it's going to make a lot of sense. Okay. So, but if you look at it now, temporarily, it's a downtrend, so you have to be very careful. So this is 30 minutes. So you have a high, a low, and a high. All right. This is a low, and this is a high. So if you look at it now, you have the lowest here. I could mark it out. Okay. Okay. So I think there's an alignment over to this point. So this is like a range for me. Then there's an in-between. So I'm going to take an in-between here. So I'm only creating a mapping, just like a top-down analysis. So you know when to hesitate to an extent, like support or resistance. So now this is 30 minutes. Now the next I'm going to go is to go straight down to 5 minutes. Good. In 5 minutes, I want to identify the trade. Even though this had formed a support, look at liquidity scoop, then you want to box it, break out of it, figure limited here, okay? So ordinarily, you're targeting here, and you see until it's out of this point, it goes nowhere, and it's more bearish or sideways to an extent, okay? But somebody can find a trade. I can tell you very shortly now, this thing is going to spike, maybe before we finish. If it does not, and take out this, that's going to be bad, to break this, that will be going down to those other lines we drew down here gradually. So it's a pattern. The best way to trade it is this. Look at this that played out. You trade this as price action, okay? Every bit of movement, like in your 5 minutes, before a spike, or it's after a spike, or before a spike, you mark it, that is a support. Look at it. And I always tell people, don't trade boom and crash. Some people catch the tick, but I don't try it because sometimes I can forget my trade and something will happen. Okay. So, but some catch it. In fact, some that's what they trade. So it's not a bad deal if they can control themselves. So when you mark this point, this place you just marked was that you expect the market to come up and return back to it as POI. So if it returns, two things. It will sweep liquidity and return up. Once it sweeps liquidity and bounce to the region, just want it to engulf this, you are buying. And your stop loss is going to be below this point. That's number one. Number two, the market, after that spike, return exactly and create a kind of double bottom. That's good. You're going to buy. Okay. Then, so you mark this. This never happened. Broke it. There's no spike back. Forget it. Broke it. Now, no spike back. Forget it. That means this is invalid. This is invalid. Now you go to the next one. So before the spike, this is the last point. So that's to say you are creating a kind of order block, okay? So ordinarily, this should be like another block for you because you are looking at, invariably, you are looking at this candle, all right? The whole thing here. That's like a demand zone. If I box it out this way, you like, you can box it that way. So no, not extended to this point. So now what you want is after this spike, then the market should come down and give you equal low. Number one. Number two, the market should come down and weaken and give you a higher low. Third, the market should come down, sweep liquidity, and return back to the zone. Now, what played out was this. The market now created a higher low. So after the higher low, once the candles stop and is scoop above this, you are entering. Perhaps you are not going to wait that it should return back here. Not all cases that it will return back there. So you are going to enter at the close of this candle, which means sometimes that's why I said you are going to need some money. So imagine you are entering, okay, say longing after this. Your stop loss is going to be below this. So let's look at how many points would that be? 38 points. So if you're using one lot, that's $38 potential loss. 1:2 risk reward. You see? Now, it never even did. It didn't get there. So let's just take it up here. Okay? So the market was trailing down. You already sacrificed that $38. Now, if you use 0.2, that is 38 multiplied by 0.2. You know that? All right. So you can always do your calculation to know what you're going to lose. 38 multiplied by 0.2. 38 multiplied by 0.2. Perhaps you use 0.2 in 3 places, so multiply by 0.3, 0.6. That's $22.8. That's what you're going to lose because you enter 3 positions. Okay. Now the market eventually did what? Spike. Right? Spike, and it didn't get to the 1:2 risk reward. So, but let's look at it. Okay, so let's look at it. It got to 70 something, to 70 something point multiplied by 0.6. Okay. Now, chances are here that you may lose this trade because if you are too convectious, you may lose this trade. And I will show you why and how and what can help you prevent you not to lose, because you may be waiting and said the market will go up to touch this point. So here, 70 multiplied by 0.6 by 0.6. So that's about $42. That's not a bad deal. Now, listen, this is the issue. The issue here is this. While you're looking to allow the market to come back, you probably may not close any of the trade. Because after all, if you want to close, you want to target 1:2 risk reward. You know why this was short-lived? You will always target to make more when the market is in an uptrend. Now, temporarily, it's in a downtrend. That's one of the issues you will have. Okay? So now let's go away. So purely, this is how, but you must, first of all, ascertain, are we in an uptrend, the market going up, and all of that. Now, to now help you to avoid some wrong signal, wrong entry, and wrong waiting, you want to add few indicators. Now, let's go. Moving averages is going to be very necessary. So I'm going to use 3 moving averages. First, I'm going to use some use 32. So I'm going to use, 10 moving average. Okay. And I put it in OHS 4. Okay. That's the first moving average I'm going to use. The second one is 50 moving average. Oh, showing 19. I said 10. Okay. So then the next is 50 moving average. 50 moving average. Okay. 50 moving average. So this may be a little bit thicker. Okay, so the color can be what it is, probably 50 moving average. Then lastly, you're going to need 200 moving average, at least to ascertain how deep you can always take off all of this, so when you don't need them. On 200 moving average. Okay, good. You're going to change the color. I love to put it in red. Okay. I love to put it in red, and of course, heavily thick. Okay. So it already confirmed to you that this is a downtrend. So for that, you're going to be very careful. So you don't want to fall victim. In fact, you can see market actually rallied up and hit, and perhaps you are going to take this trade because you have seen that the market actually wrap up. Yeah, I saw the candle stopped here before the second one. After the second one, look at 50 moving average, become a resistance for it. Okay, so now let's go. The other indicator you're going to add is called RSI, Relative Strength Index, RSI. So now I've added it. There are a few settings and changes you're going to implement on them. So let's go there. So you're going to go, you add your SMA, you turn that one to red, right? You can make this one a little bit thicker. You can leave in the color, you can change it to green, anything you want it to be changed. Here, you're going to change this one to 80. Of course, I change this to line. Of course, I make this one thicker and turn it to red, which is a barrier. So here, this 30 is going to be changed to 20. And then, of course, this is going to be thick and going to be green. And the line instead of dotted. Here can increase it to the left to be obvious, okay? Then I'm going to take off the background, okay? Remove the label. Then I go to input. So I turn the RSI to 6. So why the moving average to 5? Good, makes sense. You are done, ready for scalping. Scalp anyhow. So you can always take off all of those your moving averages when you don't need them so that you can see a clean chart. You get? So you can see a clean chart. But let's just explain quickly. Remember, the RSI, you want to buy when the RSI crosses above the moving average. But this is the point. At what point? Anywhere? No. Either below or exactly or little above the 20 level of your RSI. That's where you are getting. In fact, the best if the two of them crosses each other at this point, make more sense. Now, this is the thing. Why you complement all of this with your moving average of 10, okay? Sorry. So, why you do this? All right. So now that you have identified all of this, now what you want to avoid is that you need to know when the market is in a downtrend so that you don't keep flogging the market. Now, some people have time who could stay with the market properly, doing boom 1,000 or boom 300, boom 500, boom 600, 900, and all the like. They can do whatever, but I do not have that time. If not, you can trade it up. Look at it. When the market is spiking, okay, the RSI crosses the what's it called? The moving average. You want to buy. But this is the point. See this cross, okay? See this cross. You now want to see that the market too is not below, okay, it's not below this point, it's not below that 10 moving average. So you can see this, you probably could jump at this and you come out again, come out again until the last one. But if you look at it, if you practice what we say about using the price action, so you can see here, it's not necessary, here it's not necessary. Now, by the time you come over here, this move, you've gotten this already, yeah? And then you mark it. Even though this one is there, you mark it. And then you are able to, so because these are constants, these are confluence you're putting. If it were an uptrend, yes, you will see more better spike. Especially when the spike is getting too shorter, then it's no longer good. Then what you don't want to do is that to join the market at the middle of nowhere. Like some persons might come in here when they saw that this spike was going on, they jump in at the middle here and the market has come down. And so it can tell you that because it's in a downtrend. Okay, probably before the spike, it could return back to this point. So, but you look at your RSI process. So here, we've marked this before entering, but look at it, it's below 200, below 50 moving average. So you wouldn't want to trade that. Okay, so, but let's step back to time that the market was more massive than uptrend. So look at all these are downtrend. In fact, you have more markets at the bottom, like the RSI, down touching more to the top, as it were. Okay, let's look at when the market, good. These are powerful spike. You can enjoy all of the spike. So let's take this. Good. Let's take this. The market is already above 250 moving average up together. At that point, sometime, even before the RSI, the market touching back to the 10, you're buying because it's a continuation. Now, this is this. At the rally here, you can see that the market was not much on the ground like that. And if you still use the same style, look at this first cross, look at it below here. Then look at this second cross. If you want to do the style, it's still cool. But because I'm above 50 and 200 moving average, I don't give myself too much stress. I'm just going to be buying. So that's to say, look at it, this first spike, then mark it here. Now, this is this first spike, right? And if you look at it, this next one, market didn't come down to this point. So at this point, because you are in an uptrend, as long as, in fact, sometime you are in an uptrend, when the market is already at the bottom here, when it just spike, you enter a trade because you are in an uptrend. Then you put a stop loss below this point or even below 50 moving average. But you can come down, come below there, and come to the 50 before spiking. Then, so you know what your profit, and if you want to trail the trade, trail it over again, right? Continue. This is it. This is it. Then another thing that can make you sense when the market is now going to return and go down so much before a spike is when you begin to have some short move. Look at it. This spike, this one higher than this, you can still say you are good. This one higher than this, you can still say you're good. But like this, you're already suspecting. So for me, I don't take the short, but you want to now be careful in the market, right? Market return here, of course, come to the 50 moving average. Here still shows that, right? Then look at this. Okay, this is a perfect example of the one I say double bottom. Look at it here. Look at this candle. So the market now came down, okay, and engulf close this. So you, now that the market is even above 200, that means this is your entry. You just want to be on the safer side. So this close of this candle is your entry. Sometimes you can enter, they will give you some drawdown. You just have to take it. This is about 59 point or 59 to 60 point and all of that. Okay? Especially now that it has come below 200 moving average. want to be very careful. And the market move, and even if you are doing 1:2 risk reward, so this point's already 1:2 risk reward, 120 point. We use one lot, that's about $120, and maybe you have two position or three. Okay, so depending on how much you are trading with. Okay, so this down go this way. This is now there are days in the week that I observe this. Sometimes weekend, Saturday, it does have a lot of spike. So you see, as long as above 200, it can still be trailing. But once it's below 200, especially now, so you can see this. Remember, you mark this point and you see how this start getting down. The 10 had crossed the 50. Now, especially when 50 had crossed the 200, then you want to be very careful or you exit your positions. You can see now, this is down. I think I was telling somebody until we have another major move here. That's to say, market is about to start moving up very well. That's what it means. So here, market again got stopped. Look at it. That small spike, nothing happened. Going down. Okay, that's very simple way to trade BOOM 1000. You use a price action by checking, marking the previous move. But if you want to try other ones that way, it may be difficult. Especially, so if you look at, if you go to 500 or even crash 1000 itself, I don't have time to trade crash most times. Okay, so it's still the same way. You can see, I do not have enough time at all to trade crash like that. I trade more boom. Okay, so but the same way, okay, you have the crash, but the best signal is the one that gets to that 80. Okay, okay, so I don't trade crash to that extent. So let's look at boom 300, very fast, but crash 300 is faster. So look at this. What are you going to see to trade? It doesn't have structure. Okay, this 500. Okay, similar to an extent. So you can see now everything is still above 200 moving average, bounce to it, bounce to it, bounce to it. Okay, so 600, I don't trade all of this. We're new, not long, we're added. I don't have time for all of this. So that's how you trade boom and crash. Boom 1000, no, as it were. So it's not difficult, but it requires discipline. You have to be disciplined to maintain, your focus when it has to do with trading of boom 1000. It requires patience. But when you have the patience, you make the money. But if you're impatient, when market hits you, you run away. When you're supposed to make the money, you will not be in the market. Okay, so that's the boom 1000. Then every other synthetic we trade, we have different strategy for them. You want to learn more of them, of course, you can come to the DM. So on the comment section of this please click like. And of course, you have any question, you can always chat up and we'll clarify for you. So this is the very simple way to trade boom 1000. Does that make sense? Sure it does. All right, so let's make money together. Thank you. My name is Midas Falijima. I'm the team leader of Plan B Express. If you want to chat with me personally, you can chat on this number +234 90470 44 +234 90470 44 998. So until I come your way with another episode of different strategy in trading, synthetics, forex itself, crypto. Okay, so the next spike has happened. If you look at it now, it's like getting more interesting. Look at it, look at it, look at it. So it came down to this point, new spike. So most time, I will tell people don't join spike in the middle of nowhere. So perhaps I say when you break this, is where we take the market very seriously, right? So that's how to trade boom 1000. Sometimes people who enter here will have been frustrated, exit until the market actually spike. But will it maintain? For it to go up more, it has to cross above this initial one. This one become a double bottom. This become the neckline, and breaking it to retest that will become a movement. Okay, so thank you very much. Let's make money. Thank you, and do have a nice